This is Eward Driehuis, Vice President at ThreatFabric, and you're at another episode of Fusion Fireside. Today we're talking to Freddy Arthur. Freddy is a long-time fraud expert in the space working at NICE Actimize, and he has a very, very surprising background. Super excited to ask him what the fraud space is going to move into in 2024 and 5. Horse racing, I always find that fascinating. And what I find fascinating too, Freddy, is you've done this for a long time. Many people I speak to in fraud are in it for more than the money, right? Yeah. I don't know if you have that kind of a motivation, but if you had, I would be interested, right?
Yeah, absolutely. Yeah. I mean, so you're right. I used to work in horse racing, come from a background where family grew up on a farm. My mother was a racehorse trainer. Fell into that industry in racing, loved it, absolutely passionate about it. Used to be an amateur jockey, ended up working for the British Horse Racing Authority in the grassroots of the sport, regulating the sport. And, I think with going into a career like we are in, it's not something that people at that time would study. There was no degree for getting into anti-fraud. I have a science background, I have an analytical background, and I actually happened to get into this from meeting a family friend who ran his own business in KYC. I found it really interesting. Whilst I was working in horse racing, I learned as much as possible about the industry through evening, studying, shadowing, people who were working in the anti-fraud side of the business, and ended up working for BA Systems, Detica at the time, Applied Intelligence. And then GBG in the UK acquired a business called DecTech. And it really went from there, where I was strategic lead for their fraud business, helping to grow that fraud business with Europe. Roll on, where are we now, 2024, 13 years. I'm very happy to be at NICE Actimize, where I lead the fraud strategy for the business over here in EMEA.
That's awesome. So you're definitely the first one I ever spoke to that transitioned from horse racing into anti-fraud. But definitely, how does one become a jockey?
Very good question. I think at the age of about 4, I started riding ponies and compete a bit, and always been. I've always had an adrenaline for speed, whether it's cycling, running. I've always had always gone a million miles an hour, whatever I've done. It started from a very young age, and it just went from there. And then I think at the age of 17, 18, had my first ride in a race. And it's taken me to work for racehorse trainers in Australia, France, the US. It's been, my 20s were absolutely amazing in terms of that perspective, working in an industry where I'm outside. I'm living the dream, so to speak.
That's amazing. Because when I was checking out your LinkedIn profile, of course, I saw a little bit of a blank before your anti-fraud career. So I was thinking, is he military? Is he? But he's a jockey.
Yeah. It's as you say, it's not the most conventional route to where we're in terms of the industry, but. No, it was definitely an enjoyable time, and still very much follow the sport. Have a lot of friends in the industry, and it's something that I enjoy as a hobby, as a passion to kind of go and watch racing. But now working in this area, it's an evolving, exciting industry to be in. Yeah. And going back to your earlier point about what do people do it for? It's certainly none of us are in this industry for the money.
Right.
We are, every day is different. And the satisfaction when you finish a day and what you're providing to customers, which in our case for NICE Actimize are, many of the world's leading financial institutions globally, but also at a regional, national level, helping detect fraud and protect their clients from losses, from becoming victims of fraud is hugely, hugely satisfying.
Right, so it's not just you're not doing this for your customers, but it's kind of for society as well, isn't
it?
It's really becoming a society problem, hasn't it? So instead of just a problem for running your fraud processes and bottom line and so on and so on.
Yeah, and ever increasingly more so in the last few years. You think about how fraud has evolved. Go back 5-10 years ago, go back 5 to 10 years ago, we would have been talking about account takeover, unauthorized fraud. The last few years, the environment or the ecosystem has shifted massively to scams, social engineering attacks, scams. Not a day goes by where you don't pick up a newspaper or online news story about victims who have been scammed by tens, hundreds of thousands of pounds, euros, dollars. So the societal impact is huge. And whether you're in the UK, in the Netherlands, where you're from, right across the world, the challenge for banks and for consumers has grown year on year, and it's become such a big problem that within the UK alone, 40% of all crime is fraud related.
Wow.
Yet only between 1 to 2% of police resources can actually be put onto tackling it.
Right. And also, I believe that, law enforcement is not really, we're never going to put in enough pressure for the bad guys, enough risk for the bad guys that they're not going to attempt it anymore. It's kind of something that's inherent to the financial industry. It's just part of the business, if you will, isn't it? Yeah.
It is to a degree. Wherever there's the opportunity, fraudsters will pivot and take the path of least resistance in order to defraud a victim. So, take scams, for example. There are multiple varieties of scam types, and those will evolve over time in terms of, right now, for example, we've seen the value of scams within the UK alone, the value of losses has gone down a small amount.
Right.
However, the number of cases has gone up.
Right.
But in terms of fraud typologies, we see more in the way of purchase scams. So, consumers, victims, seeing an advert that may look maybe too good to be true. Facebook Marketplace is a good example where goods and products are sold on that particular marketplace that may not exist or may not be delivered. And those types of scams are very difficult for banks to be actually able to pick up. And that's a whole challenge with authorized push payment fraud. It is a fraud typology whereby on the face value, it looks like a normal, genuine transaction. It's a customer using their own device. It may be normal activity that may look like normal activity, purchasing a good or product, but actually it's something that does not exist or they've been coerced into making it.
Right. So following this train of thought, what do you think about the efforts of having big tech and telcos be involved into the anti-fraud process as well? Does that complicate things, or do you think there's some definite benefits for the industry to be
definite benefits? Should it complicate things? No, it should be. I think as things stand, if we take the UK right now, the 50-50 liability shift will be coming in next month, 7th of October, and that will mean that banks alone are on the hook, both the sending and receiving banks, 50-50 liability. So there's a lot of pressure on banks, whereas banks actually they're not fully responsible for this. There is a wider ecosystem of players, whether it's the telcos, the big tech firms, social media. Scams do not just originate from one particular threat actor. There are multiple actors that either facilitate or enable these scams to happen. And I feel like the rest of the industry that actually, these players should bear some responsibility. But it's interesting that, the government have tried to bring them to the table. Hopefully in time, there will be some type of model whereby actually those different stakeholders will bear responsibility. But for now, it's going to be, from next month, it'll be very interesting to see how these bold changes that the PSR are bringing in take effect. And we all hope for the good of, reducing scams, protecting victims, that these effects do work and reduce fraud. But it's interesting to see what happens in other countries. They're all looking very closely at what's going to happen in the UK.
They are.
Europe, PSD3 will be coming around the corner in a year or two. Their European PSR version, PSR1, will be looking purely at the impersonation or imposter scam types. So they won't be looking more broadly at wider scam typologies, but it'll be more on examples, for example, where the banks have been impersonated by the fraudster, whereby actually banks have a bit more control to ensure that victims understand that it is the banks getting in hold of the customer rather than a fraudster impersonating the bank.
Right. So the interesting thing that you just said is that when we're talking about scams and fraud, my impression is that we're not always talking the same language, not always have the same definitions about stuff. For example, one of the examples is looking at PSD3 in Europe. Bank impersonation. So if the scammer impersonates a bank employee, that would be included in the directive. But if they impersonate a Microsoft employee, that would be excluded, for example. And I sometimes worry that because we're not talking the same language, we're kind of missing out on stuff. What's your ideas on this?
I think there's still some consultation that will happen in terms of actual definitions. But the one thing we should take away from this is it will not be so encompassing in terms of all types of scams compared to, for example, in the UK, which covers multiple scam typologies. It will be a bit more refined in terms of some of those impersonation, imposter type scams.
Yeah. What do you think will happen? I've some people seen making some predictions, some light tea leaf reading, if you will. Some are saying, hey, listen, these bad guys, they will go after these banks that are with scam types covered under PSR, because that will allow them to do certain things or get a quicker revenue. What's your opinion on this? What do you think?
I think the industry concern is firstly moral hazard. So moral hazard whereby if an individual or victim realizes that if they perform a transaction, let's say, for example, for a product or service, goods that they see on Facebook Marketplace or a marketplace website, it might be a pair of trainers that have been discounted by 90%, amazing deal. They may consider that if it's a scam and they make the purchase, they will get reimbursed regardless. Now, that might be true the first time, but the concern here is that consumers will take advantage of the fact that they know they'll get paid back, and they will act in such a manner whereby they're, less cautious.
Right.
So that is one concern. But then banks will still have to look at whether or not a consumer has been grossly negligent. And that's a very high bar.
Exactly.
So gross negligence will be a very important factor here. They'll also be looking at vulnerability. So the vulnerability of the consumer at the point in which they make that transaction. So the FCA have provided guidelines in terms of life events, resilience, a number of capabilities that banks will be able to look into as part of an investigation to understand that if that consumer was vulnerable, then gross negligence would not apply. There's a lot of responsibility on banks as part of the investigation into a victim's claim, to be able to understand whether or not they should reimburse that victim or not. And ordinarily, there are 5 business days in which they should do that. They can apply stop the clock, which gives them an extra, 25 business days. It's 35 business days in total. But between sending and receiving bank, they need to make a decision within that time frame.
Yep.
But you can imagine, there's a lot to consider as part of that. Has there been first-party fraud? Has there been gross negligence? Is a customer vulnerable? Taking all the information as part of the investigation, it's a lot to consider. And banks are under a lot of pressure in terms of the number of alerts, the number of investigations they have already on their plate. So it's going to be a significant change to look into.
Exactly, because the anti-fraud processes in banks still need to make these assessments.
Yep.
And every single case you just mentioned, the assessment should come from the bank. Hey, listen, we think this is reimbursable. We think this is not reimbursable, and this is our evidence.
Yeah.
So they always need to have some good anti-fraud process in place, I imagine.
Correct.
Right.
And actually, it's not just looking at scams; it's looking at inbound as well. So with what's happening in the UK, they've put as much pressure, as much focus on outbound transactions in terms of scams, compared to also inbound to look at money mule accounts. Mule accounts are the critical vector via which scams can actually be orchestrated, can take place. For any scam, that money needs to go into an account that is a mule account, either controlled by the fraudster or managed by the fraudster.
Right.
So what the PSR are doing they are incentivizing controls to look at inbound and be able to identify those mule accounts as early as possible in order to ensure that any mule account found will not be reused. So if you're making it more difficult for fraudsters to operate, i.e. identifying those mule accounts, stopping those mule accounts, then fraudsters are going to have more increasing challenges to be able to actually conduct scams in the first place.
Right. So since you have, of course, visibility on dozens, maybe even hundreds of customers running anti-fraud, do you know how many frauds make use of synthetic mule accounts, or let's say identities, rather than, let's say, recruited identities?
A really interesting question. There are so many different types of mule threat actor out there, from accounts that have been set up by fraudsters deliberately for that purpose, to accounts that have been taken over, perhaps sometimes as part of a scam. Let's take, for example, romance scams or investment scams. Those particular accounts may be utilized as accounts to accept funds and then pass funds on to other mule accounts. But there are witting, unwitting mule accounts, mule herders, complicit mules, a very wide variety. We don't have the stats in terms of that, and it would vary from one financial institution to the next to different regional jurisdictions. But it is something that we are seeing a lot more focus on. How can we identify those mule accounts much, much earlier on in the process? One area that's been quite interesting is that in account opening, if an account has been opened and in the very initial stages, in the first 90 days, we're looking at telltale indicators of whether or not that account is an account that's going to be serviced as a mule account. So, for example, what would you expect an account that's just recently been opened to behave? Is it normal that no direct debits or standing orders or no salaries paid into it, or are there multiple beneficiaries set up within a short space of time? Are there multiple devices logging into those accounts? How is that account being funded? All those kind of different signals, quite interesting on their own, may not show any signs of mule activity, but when you look at that combined, you have a huge avenue to be able to identify potential mule behavior.
Right. Yeah. So I'm interested. You've worked on projects pretty much all over the world, right?
NICE Actimize worked on projects all over the world. Yeah.
Well, maybe you.
Well, we do. So I work across EMEA, but NICE Actimize work with clients right across from the Americas, Europe, Middle East, Africa, to APAC.
Yeah. So the interesting thing is, because earlier you mentioned different approaches to, let's say, regulations, or let's say the regulatory drivers from the US is, of course, from a litigation perspective, from Europe is from a standardization perspective, and from Australia is from a consumer perspective, but they're kind of all pointing in the same direction. So what I'm wondering is, what do you see is differences in, let's say, certain regions? Like, how is Europe different, or is Europe, is it different from country to country, the way that they suffer fraud and deal with it, or is there some kind of commonalities toward how fraud is evolving and how we deal with it across the world?
There will be regional variations. I think there are increasing commonalities across certain regions. I think APP fraud, or otherwise known as scams, social engineering attacks, started out more prolifically in the UK, and I think that's as a result of largely the banks bringing in controls as a result of PSD2, which was a very good thing to stop unauthorized fraud, account takeovers. So the introduction of strong customer authentication methods, the use of device intelligence, behavioral biometrics, which very much helped to reduce unauthorized fraud. But as a result, fraudsters pivoted to use the victim, the consumers, to authorize a transaction as an authorized push payment fraud. So the use of scams to trick or coerce that customer into making a transaction. So in the UK, we saw it, a bit earlier on, but in the more recent 2, 3, 4 years, we've certainly seen scams pick up much more in abundance in wider parts of the world, across Europe, across South Africa, the Middle East, in the regions where I'm working in, as well as obviously the Americas and Asia Pac. But if I was to talk more about the different scam typologies that we're hearing more about, UK very much purchase scams at the moment have been high in number of cases. In Europe, we're hearing a bit more about the increase in certain types of impersonation scams.
Right.
Bank impersonation scams, for example, which have been particularly high. Investment scams as well. Purchase scams to a degree, but it will vary from one market to the next. If we go to South Africa, for example, they have an altogether different challenge in terms of kidnapping and where fraudsters are actually phone jacking a customer to force them to actually make a transaction on their own telephone,
right,
to a new payee. And the implication for that is banks, they may see that this transaction is unusual, but if that person has got a gun to their head, then there's very big moral considerations in terms of you have to let that transaction go through. So an altogether different challenge that they're facing.
Right. So it's interesting because what you earlier said is, like, in the old days we worried about our credentials being stolen, so we learned not to trust the credentials anymore.
Yeah.
Then we learned not to trust our devices anymore because devices can be taken over, right? From account takeover to device takeover. And now we know that, we can't even trust our behaviors anymore, right? Because we can be manipulated. And I'm sure you see those cases when talking to your customers, that even when the bank is there in real time calling the victim, hey, listen, you're likely being scammed. They've been instructed by the criminals that they might expect a call from the scammer, right? So still the manipulation of behavior is very nefarious, isn't it?
An individual may have been a victim of a scam, and then they may have been contacted again by a fraudster under a different guise, pretending to be the bank, saying, we understand that you've been targeted, we'd like to help you, for example, we understand that your account is in danger, we've set up a new safe account for you to transfer funds into. And in the UK, we have confirmation of payee, but fraudsters can very cleverly get around that by, for example, saying, for safety purposes, we are going to ask you to transfer your money into this account. You need to set up this name, John Smith. We've put this name in for security purposes. It should be direct match. Transfer your money into that, and that will be credited into your own account that we set up. And they'll use social engineering techniques to give confidence, but also put that customer under pressure to act there and then, rather than delay things.
Yeah.
So the fraudsters are excellent manipulators, and it's something that banks. There's a lot of educational messaging and messages whenever you make a transaction to a new payee. You see a lot of information to say, do you know this person? Do you understand what you're buying? And it's getting consumers to actually read that or react to it rather than just scrolling through the same information saying, yeah, and just click through. Yeah. So, for example, using kind of more adaptive behavior analytics to manage messaging could easily help on that front.
Right. So I want to ask you a little bit of a cheeky question, if I may.
Yeah, go ahead.
Right. So my son, he's very interested in what I do. And he asked me a question. Hey, listen, Dad, you're now in anti-fraud for a bunch of years. Are you doing a good job? And I thought that was such a good question, because I was like, well, if I'm looking at the statistics, and this problem is getting bigger and bigger and bigger, right? We're not the problem is not getting smaller. So you might be making a good argument to say, I'm actually not doing a good job, son. What do you think? Are we doing a good job?
It's a really interesting question. I'm very hopeful in terms of the industry, in terms of the technology and the data that now is readily accessible to help us as an industry identify where there might be anomalies, where there might be suspicious or fraudulent activity. It is a difficult job. Forever fraudsters are adapting to new techniques. Generative AI is a very good example of something that's come in and fraudsters are using it to help them exploit consumers, whether it's through delivering very good, convincing scam content to the rollout of huge numbers of scams, but also the concern about using Gen AI to, for example, impersonate a particular person, whether it's through voice cloning or using biometrics. So that is a big challenge that us as an industry, financial institutions, us as technology providers will have to grapple with. But I am very hopeful, speaking from my own perspective, looking at what Actimize have, looking at the wider industry, how we can leverage that to help combat the evolving technology that fraudsters are harnessing, but at the same time, what we can do to help prevent those types of fraud.
Exactly. And I reckon also, what you're saying is, well, there's always the prevention paradox. We've prevented so much misery out there, but that misery never happened, right? So you're never going to be applauded for something that didn't happen.
Yeah.
Right?
For me, I get huge satisfaction in knowing that our technology is helping to detect millions and millions of potential losses that otherwise would have been lost to victims. Their life savings, their livelihoods, that banks, our clients, are using every day in real time to detect and prevent fraud. But we always have to stay ahead of our game. We always have to stay ahead of fraudsters, and the job is never done.
Right. So for you, as a runner and as a jockey working in this space, what are lessons that you took from your competitive sportsmanship into anti-fraud?
Very good question. I think tenacity. I think being able to be very resilient. I think as an industry we all are under a huge amount of pressure in terms of work. No day is ever the same. We're constantly having to pivot to different fraud challenges. Stamina is a big thing. I think it's a very exciting, fast-moving industry to work in, and you're learning every day. You're learning every day in terms of new typologies, challenges, but I find it extremely rewarding to be able to finish a day and know that we are helping both the banks, but also everyday consumers protect their money and fight the good fight against fraud.
Well, Freddy, I thought it was amazing to speak to you today in London. So thank you for that. For Threat Fabric, my name is Eward Driehuis, and please check out other episodes on our website, www.threatfabric.com.